There is increasing levels of insolvency across the industry. So when you actually look at the data behind that, it's now well above long-term trend and probably has been since the recovery from COVID. That's continued to spike and doesn't show any signs of going back to normal. And then you've got this future pipeline of public sector work at this moment in time. You've got the housing crisis that's kind of overlaid with that. And we've got this overall issue of potentially, not right now, but over the coming months and over the next couple of years, a lot of work coming through and a very, very constrained construction supply chain to try and deal with it.
Historic housing undersupply is fairly well documented, and of course we see big ambitions from both state and federal governments to address the shortage. But are those realistic goals that can be achieved?
If you're looking at the data, it's probably, they are very, very ambitious goals at this moment in time. When you actually look at what's kind of been delivered over the last 5, 6 years, even the last 10 years, and you look at what's been approved, what's actually started on site, what's actually been delivered, those stats are well below the kind of thresholds that we're talking about at the moment in terms of some of those housing targets. So even if with good headwinds, even with the market responding as it normally would, they would still be considered very, very ambitious. With the issues we've got at the moment of rising labour costs, skill shortages, rising insolvencies, constrained capacity and constrained supply chains, it is going to be very, very interesting to see if we're going to get anywhere near it. Our projection is we're probably going to fall short. Part of the issue we've got with that is that to deliver all that housing, you need a very, very buoyant private sector, commercial sector. And there is an awful lot of public sector work that's kind of coming through, which is really taking up all that capacity. So the private sector is going to struggle. Not only is it going to struggle from a valuation perspective, but it's also going to struggle to actually attract the builders to deliver the housing and the apartments that we need.
How many tradies do we need to complete all these variety of work?
Probably a lot more than what we need at this moment in time. There's plenty of reports out there at the moment. Infrastructure Australia do a market capacity report. They're talking of, well, in terms of the number of labour that we need to deliver these projects, and I don't have the number to hand, but it's in the hundreds of thousands of additional labour that we need if everything comes off. Now, when you actually look at these pipelines of work, there's always a cliff. There's always a massive amount of work that's going to happen in the next couple of years. The reality is a lot of that just equalises out over time, and the cliff isn't necessarily as steep as we think it's going to be. But there is a lot of work out there, and we do have a diminishing supply chain and diminishing capacity to deliver it all. So when you look at particular states, and you look at Queensland in particular, where you've got a massive health programme, and then you've got the Olympics that are going to be kind of coming through in terms of project delivery over the next 2 or 3 years, you do start to question, well, the market is already quite busy. How are we going to deliver all these major projects that are coming through?
And I guess one other key factor is this historically higher for longer interest rate environment that we are facing and potentially clashing with this demand that we're seeing from government. So how do you reconcile that environment?
Well, I'll hasten to caveat that I'm not an economist, so I'll give my best guess on that kind of answer. But when you start looking at interest rates, it is going to impact more of the private sector more than it is the public sector. Public sector, government councils are not necessarily driven by the same kind of valuation and balance sheet that private developers are. So interest rates do increase the cost of borrowing. That is going to have a financial impact. We know with construction costs increasing at the levels that they are, that private developers are struggling to make valuations actually stack up. So there's a lot of projects that are not proceeding. And as soon as you start looking at interest rates increasing, then that's just going to add more pressure and more stress to that part of the market. When really, to deliver all the housing and the apartments that we're talking about, you need a very, very buoyant private sector to deliver that level of housing.
Mackey, thank you so much for your time.
No worries. Thank you, Rachel.